If you're a veteran, active duty service member, or part of the National Guard or Reserves, there's one benefit you cannot afford to overlook: the VA loan. It's one of the most powerful tools to build real estate wealth with almost no money out of pocket. In this video, I'll break down how the VA loan works in 2025 and how you can use it to buy your first home or even a multifamily property. First, what exactly is a VA loan? The VA loan is backed by the U.S. Department of Veterans Affairs. It allows qualified buyers to purchase a home with zero down payment, no private mortgage insurance, and often better interest rates than conventional loans. You still go through a private lender, like a bank or mortgage company. But the VA guarantees part of the loan, which lowers the risk for the lender. This means you can buy a home without putting 20% down, and that's a game changer. Who qualifies for a VA loan in 2025? You may qualify if you meet one of these. You served 90 days active duty during wartime. You served 181 days during peacetime. You have 6 years in the Reserves or National Guard. Or you're the surviving spouse of a service member who died in the line of duty. Check with a VA lender to confirm. The rules are strict but clear. Now let's talk benefits, because this is where the VA loan really shines. First, no down payment. That means instead of saving $20,000 or more, you can buy with as little as $0 down. Second, no PMI, that's private mortgage insurance. Most conventional loans require PMI if you put down less than 20%, and that can cost you hundreds per month. With a VA loan, that money stays in your pocket. Third, competitive rates. Because the VA guarantees a portion of the loan, lenders usually offer better interest rates, which saves you money every single month. Fourth, you can reuse your VA loan benefit. A lot of people think it's one and done. It's not. You can use it again and again. Even have more than one VA loan at a time under certain conditions. Let's talk about how to use it for real estate investing. Yes, that's possible. You can buy a 2, 3, or even 4-unit multifamily property using a VA loan as long as you live in one of the units. This is called house hacking. You live in one unit, rent out the others, and let the tenants cover your mortgage. Imagine owning a duplex. You live on one side, rent out the other, and live almost mortgage-free. That's real wealth building, and it's fully allowed under VA guidelines. There are a few things to watch out for, though. The property must be your primary residence, not an Airbnb or a flip. You'll need to move in within 60 days of closing, and the property has to meet VA appraisal standards, which check for safety and livability. Now here's a pro tip. Work with a lender and real estate agent who know VA loans. Not every loan officer or agent understands the VA process, and that can slow you down or cost you money. Find professionals who have closed VA deals and know how to navigate the system. Lastly, don't wait. Even if you're not ready to buy tomorrow, talk to a VA lender now. They can help you pull your certificate of eligibility, analyze your credit, and map out a timeline that works for your situation. The VA loan is not just a benefit, it's a wealth-building tool. Use it wisely, and it can be your stepping stone to real estate ownership, cash flow, and long-term net worth. If you found this helpful, hit that like button, drop a comment with your questions, and subscribe to Net Worth Nation TV. New videos drop every Sunday, Tuesday, and Friday.